We are here again to define and explain utmost good faith principle. By the way, we trust that the 2 previous videos on the principles of insurance have given you some insights. Raise your hands and nod your head if they did. Oh, wait. We can't see you. Just like the video and leave a comment. We will acknowledge and respond. Now, on to this video's lesson. Utmost good faith. The principle of utmost good faith, also known as the duty of utmost good faith, is a fundamental principle in insurance law that requires all parties involved in an insurance contract to act in good faith and with complete honesty towards each other. This means that both the insurer and the insured have a duty to disclose all relevant information truthfully and completely, to the best of their knowledge, in order to enable the insurer to assess the risk and determine the premium to be charged. The principle of utmost good faith is a mutual obligation that applies throughout the entire duration of the insurance contract. It is a key component of insurance contracts and is based on the idea that insurance is a relationship of trust between the insurer and the insured. The principle is considered to be an essential feature of insurance contracts and is reflected in various aspects of insurance law, including underwriting practices, claim handling procedures, and policy interpretation. The principle of utmost good faith is applied in various aspects of insurance, including the following. 1. Underwriting. Before an insurance contract is entered into, the insurer must assess the risk and determine the premium to be charged. The insured is required to disclose all relevant information about the risk being insured, including the nature of the property or liability being insured, any prior claims or losses, and any other relevant factors. 2. Claims handling. In the event of a loss, the insured has a duty to report the claim promptly and to provide all relevant information to the insurer in order to allow the insurer to assess the claim and determine the extent of its liability. 3. Policy interpretation. The principle of utmost good faith applies when interpreting the terms and conditions of an insurance policy. The insurer is required to act in good faith in interpreting the policy, and the insured is required to act in good faith in fulfilling its obligations under the policy. 4. Renewal of policy. When renewing an insurance policy, the principle of utmost good faith requires both the insurer and the insured to act in good faith and to disclose any changes to the risk or any other relevant information that may affect the assessment of the risk. A breach of the principle of utmost good faith can occur in various scenarios, including the following. 1. Material misrepresentation. If the insured makes a false or misleading statement on the insurance application, such as concealing a prior claim or providing incorrect information about the risk being insured, this may be considered a breach of the principle of utmost good faith. 2. Non-disclosure. If the insured fails to disclose all relevant information about the risk being insured, such as a previous loss or a known hazard, this may also be considered a breach of the principle of utmost good faith. 3. Misrepresentation during the claims process. If the insured provides false or misleading information during the claims process, such as concealing a prior loss or providing incorrect information about the circumstances of the loss, this may also be considered a breach of the principle of utmost good faith. 4. Failure to cooperate. If the insured fails to cooperate with the insurer during the claims process, such as failing to provide requested documentation or failing to attend a scheduled examination under oath, this may also be considered a breach of the principle of utmost good faith. 5. Policy abuse. If the insured engages in behavior that is designed to defraud the insurer, such as staging a loss or making false claims, this may be considered a breach of the principle of utmost good faith. These are just some examples of how the principle of utmost good faith may be breached in an insurance context. A breach of the principle of utmost good faith can have serious consequences, such as the denial of a claim or the cancellation of an insurance policy. It is important for both the insurer and the insured to act in good faith and to disclose all relevant information in order to ensure that the insurance contract is properly understood and fairly administered. In conclusion, the principle of utmost good faith is an important principle in insurance law that requires all parties involved in an insurance contract to act honestly and in good faith. This helps to ensure that insurance policies are properly assessed and that claims are handled fairly and efficiently. The end. Let us meet again shortly to continue with the class. Meanwhile, don't leave without subscribing, liking, and commenting.